Good morning, members. The first item on the agenda today is the membership update report, which notifies members of the recent appointment of Tom Humphrey as a scheme member representative on the board. Members will be aware that earlier this year, a vacancy opened on the board. There was an advert, independent shortlisting process, and interviews were held, and Tom was selected. The appointment has been approved by the monitoring officer, and members are asked to note the appointment. However, I'm happy to answer any questions you may have. I can't see any questions, so I'm therefore saying that the board has noted the appointment. The second item on the agenda is election for chair. Do we have any nominations, please? Oh, sorry, Val, I can't hear you. Did you nominate someone? Sorry.
I was going to nominate Dennis as chair.
Thank you. Do we have a seconder for that nomination?
Barry has his hand up.
Barry, are you happy to second that?
Yeah, I would like to second Dennis as chair.
Thank you. Are there any other nominations? I can't see any. Can I just do a quick vote? Can I see all those in favour, please? If you could just raise your hand like that would be. Thank you. Do we have any against? And any abstentions? Thank you. That is.
Yeah.
Thank you.
Thank you. I will now take over and just to confirm the normal sort of statement that the county council allows filming and photography at its public meetings. So please feel free to take pictures and use social media during the meeting. Can I ask, though, that everyone present turn their mobile phones to silent or vibrate whilst the meeting is taking place? To enable the meeting to run in an orderly manner, I would ask all members of the board who have video cameras to keep their video cameras switched on for the duration of the meeting and to keep their microphone muted except when I invite them to speak. Officers will join us to introduce their reports in the usual way. Any members wishing to ask questions or make a comment should indicate this by clicking the raised hand function on the right-hand side of their screen. When I invite you to speak, please unmute your microphone, ask your question, and then mute it again. I would ask for your patience if we run into technical problems, and should this occur, I will declare an adjournment whilst the fault is addressed and the public broadcast will be paused. If it's not possible to address the fault, the meeting may be abandoned until such time as it can be reconvened. Before we begin with the remainder of the agenda items, I would like to welcome Tom Humphrey, Councillor Martin and Councillor Fain to the board. I would also like to acknowledge the hard work and dedication of Councillor Seif and previous Councillor Simon King, who are no longer members on the board. The third item is the election of the Vice Chair. I am proposing to nominate Barry O'Sullivan. Do I have a seconder for that?
Second.
Thank you, Val. Are there any further nominations? Thank you. There seems to be a general consensus to support of the nomination. If anyone disagrees, please raise their hand now. I see no objections, so we'll accept that nomination, and Barry is elected as Vice Chair. Thank you, Barry, again for your service. Sorry, I just need to confirm that by a vote. Those in favour, could you please raise your hands? Thank you. Right. Barry, you are elected as Vice Chair. Thank you very much. Sophie, are there any apologies for absence?
No apologies were received.
Okay, thank you very much. Are there any disclosable pecuniary interests or non-statutory disclosable interests? No, thank you. Being asked to approve public minutes of the meeting on the 4th of April as a correct record. Are there any issues with those being Val, over to you.
Thank you, Dennis. It's in respect of, let me get to it, page 9, regarding the internal audit report. The minutes do not actually state what I actually asked the head of audit to actually do, and I wonder if these could be amended to say something like, it was requested and agreed by the head of audit that a one-line summary could be included in the executive summary to state that management had agreed to the audit findings and actions that had been put in place.
Well, now, what's any comments on Val's proposed change? Barry, you were there. I mean, no officer comments on that correction.
Can
Yeah,
I
I don't
just,
remember.
sorry.
I was just going to say I don't remember, but I accept. I'm sure Val is correct in what she's saying.
And Ben is nodding his head. So
Can I just add that Sophie went through the video again at her suggestion, and actually she agrees with changing the wording or adding the wording.
It's really helpful because Val did come to me prior to this, and we then reviewed and agreed on the additional wording that she mentioned, which is always really helpful prior to the meeting. So thank you.
okay, on that, thank you for that. Then we will take that modification. Are there any other edits or corrections required to those minutes? Okay, with that change then, on that basis, are you happy to approve the minutes subject to that change? Again, I would ask anyone who objects to raise their hand now. On that basis, the recommendation to approve the minutes is carried. An updated action log is also included in the published papers for this meeting. Are there any questions on that updated log? Barry?
I was just a bit confused. It might be correct, but 205 on page 20, it says amend section 11.5, training, say Northamptonshire Pension Fund. Yeah, I'd probably have to refer back to the training strategy why it says Northamptonshire. I'm just wondering whether it should be Cambridgeshire. I don't know. It might be me not referring back to the papers.
Thank you, Barry. We'll definitely double check that. I know sometimes we do cross-reference, but in all likelihood it might be an error. So yeah, thank you. We'll double check that one. And also, Chair, if I may just add a couple of comments around the action log.
Yes, please.
So just to confirm that the first action on there that's in progress, we have asked for an update from the team on that one. So hopefully for the next meeting, we can confirm whether that overpayment has been paid. In terms of the internal audit report, obviously most of those actions are going to be from internal audit themselves. Obviously they've got Mark's name against them. One of the actions we actually have updated, internal audit did give us an updated position. So we have circulated this week the couple of outstanding actions. So that can change to a completed action now for next time. Also the first audit action, probably linking slightly to what Val was saying in the minutes from the previous one as well. Probably not worded quite right in terms of the comment. So obviously we're looking, there's a difference between the report being approved coming to the board and the committee and the prior actions before the audit is agreed. And obviously we agree an action plan for that, but we'll make sure that internal audit clearly reference that in their reports for ongoing reports as well, as Val has just mentioned as well. And the only other one I just wanted to update was on 205, the training strategy as well. There is a future action on there, but actually the slides have been distributed already at the point of the training. So that is a completed action as well. But happy to take any further questions.
Thank you very much. Val, you have your hand up still.
Yes.
Or is this new?
I have a couple of questions actually, Dennis.
Fine.
Okay, first thing, typo, it just follows on from what Barry was saying. There's 2.5 2020. Oh, sorry, start again. Put my teeth back in. There's 2.205s on page 20. The second one says officers to correct the numbering in the training strategy. I think it's just a typo there.
And your second point?
And my second point is page 121, 196. I just wanted to say that this point seems to be an outstanding for getting on for 6 months now. I just wondered, you know, what progress is saying ongoing. I just wondered why it's actually taking so long.
Yeah, this is one that I would agree has been going on for some time. With the chair's approval, because of the subject and what it covers, I'm happy to talk about where we've got to and what's been spoken about in exempt session, if that's okay.
Yeah, that's okay. Thank you.
And Val's point about the type training in the training strategy, that it does look like a typo.
Yeah, we can amend that.
Fine. Are there any other points? Then we'll take the action log as noted. Item 6 is the governance and compliance report. Michelle, are you leading on that one? Can you introduce the report, please?
I can, thank you. And just really as a bit of a pre-warning on this one, there's quite a bit of an update, and obviously we've got some new members with us today as well, so I just wanted to kind of give some further clarification around some of the areas as well. So the first thing I really wanted to touch on this report is one of the biggest activities we've got going on at the moment is the McLeod rectification. Obviously, prior board members have been receiving an update on this virtually every meeting. But just as a brief recap of where we are, and obviously for our newest members, so the McLeod remedy addresses the age discrimination in the LGPS following a court ruling. So from October 23, protections were extended to younger members who were previously excluded. And the effect of that is we calculate the benefits in the most favourable way to make sure that nobody's disadvantaged. So within the fund, all cases from the 1st of October have been processed in accordance with the regulations. How this came about, initially all funds were required to complete the McLeod rectification by the 31st of August this year. And if this was not possible, it became apparent that a determination was required to allow that extension. I think most funds were always planning on using that extended period, but what we needed to do is obviously formalise that arrangement in the eyes of TPR. So what this determination effectively does is it allows the extension of up to 12 months in line with the LGPS regulations. If the rectification isn't complete by the 31st of August and there is no determination, we would have to have reported that as a breach of the law. But we effectively have taken a determination to the pension committee for July. So that piece of work has been done. So we are compliant on that component. So in terms of the determination itself, this project, as most of you will be aware, has been faced with some real challenges: data collection, data quality, the complexities, the scale, and very importantly, the communications that we've been trying to send out and keep our members up to date as well. So what the determination shows is that for Group 1 cases, these are the new final underpin dates that covers deaths as well from the 1st of October 23, fully compliant in those areas. We switched on the McLeod functionality in Altair on day one. Any areas where we did have, where there were any system issues, we did very quickly create manual workarounds so that nobody was disadvantaged and that we could maintain compliance in that area. So we are confident in Group 1. Group 3, I'd say next are the near compliant cases. So with these, the majority of cases are expected to be compliant, but there's a very small number where further analysis is required in these areas. So these include issues such as pension debits, club transfers, and remedial service that has been transferred. Most of this Group 3 is linked to our active and deferred benefit statements. We are expecting, and we're well underway for getting the majority of those out. There will be a very small percentage that either don't go out or that will go out, but they just won't have the McLeod rectification on that one element, and there will be a comment in there just to say if that is what has happened in that individual's case. So the biggest challenge we've got at the moment is the Group 2 cases, which we are not fully compliant in and actually have quite a bit of work to do there. We've started in the area of retrospective retirement cases, and we're making really good progress with those. We're sending out letters in batches to kind of control the replies, but at the moment we've sent out 34 letters in a couple of batches, and we've had 15 returned to date, which is really good. We've got other retrospective work still to do, and there is a action plan that I will be able to bring to you for the next board meeting that details all the timelines that we've resolved to do in those. Some areas are delayed due to complexities. Transfers, for example, will take, we haven't got the system functionality, so that's an issue because of the volume. With any cases that are linked to a death process, I would say that it's not so much the volume that's the issue, but it's the sensitivities around those. And actually LGA, I asked LGA last week, I think it was, whether they were going to be doing some centralised communications on those, and they have confirmed that they're working on those at the minute, because they do appreciate that for all of us funds, it's obviously quite a sensitive thing to go back and reopen cases that have obviously may have been, the death might have occurred, quite some years ago. So one final point on McLeod is that anybody can come back to us at any time to disclose previous service. So at the moment, we obviously are working on what we know at this point in time. We do, as a backstop, also ask at the point of transfer or retirement as a final opportunity. So hopefully that's just a bit of an overview of where we are with McLeod and what that's all about. You'll also see in the report about the access and fairness consultation. So obviously this is looking at improving the fairness and access in the LGPS. Lots and lots of different areas covered in this consultation. And due to the areas covered, the consultation does close on the 7th of August and it went live on the 15th of May. So we have had a good period of time to have a look at those. We have now formalised our draft response to that, and these were sent out to both the chair and vice chairs of the pension committee and the pension board this week. It might have even been yesterday, I think. So we're just waiting, obviously, any final feedback on that, and then we will submit our response there. One final thing, and Mark might also pick this up later, but as a result of the access and fairness consultation, we have also updated the business plan. Originally, it was just talking about the rectification of survivor benefits that we knew was coming down the line, but we felt it more beneficial to actually widen that up to cover the consultation and the broad scope that's in there. So the next big thing that's not really touched on in the report, but I just wanted to give you a heads up of where we are. Pension dashboards is obviously another big thing that we've got going on at the moment. So effectively, we need to be connected to the ecosystem by the 31st of October 2025. Little movement from the last report in April, which is why we've not brought a report in its own right this time. But we will do for the October meeting, because what's happening at this current point in time is we're about to go into phase 2 of the onboarding, and this consists of a 4-week plan. So all being well, we should be live on the ecosystem mid-August, which is obviously way ahead of the deadline that we've got. What this is currently involving is the further testing against the matching rules, the registering with maps, and the uploading of the live data. We've chosen, as you know, a single source solution for our AVCs. So the onboarding process will also cover those at the same time as well. We do understand that nationally, controlled testing in the live environment will start sometime over the summer, and it's due to pick up pace when there is a confidence in that testing and a level of insurance. And then the dashboard available point, we assume, will be picked up or will be announced once obviously that testing is fully underway. Just the last 2 sections just to cover off, and Val, I can obviously see you've got your hand up. So just the skills and knowledge opportunities. So this section links to the most current version of the training strategy that we've got in place, and really just for our new members. So Lola is our core method of training, and as per the policy, it is mandatory with a 6-month deadline to complete those. It's linked to the SIP for Skills and Knowledge framework. Training is really, really important, not only just because obviously good governance of the fund, but also we have signed up to participate in the national skills assessment exercise in 2026. So this is as a result of the code of practice, effectively making sure that we can demonstrate knowledge and close any skills gaps and knowledge gaps if there are any. Beneficial if obviously everybody can look through the strategy just to familiarise themselves. We do provide a list of conferences, and actually an updated version of that Madalena did send round earlier this week. They are all supplementary to Lola, and there's also the pension regulator training toolkit as well, that also has a 6-month deadline on there. And very finally, the policy and strategy updates. So this really for our newer members is an opportunity to look at any policies or strategies that have had any immaterial amendments made during the period. What we agreed a few years ago now is that the board and committee would review policies on a 3-yearly basis. But what this section of the report actually does is gives opportunities when we do our annual officer review, just for you to say whether you've got any comments around those, and basically if you agree that they're immaterial changes that you agree with. In the same breath, if there's any that go to the pension committee and you want to give a post-scrutiny review, it's a mechanism that we can feed that back to the committee and say, actually, this point was raised at the board meeting. We want to basically change this section and get their agreement as well. So that's the main points of that report. As I say, I do apologise, it's quite an encompassing report with several different areas in there, but happy to take any questions.
Val, you have a question.
Yeah, I do. It's just a very quick one. Pension dashboard. I noticed that you've got a 4-week plan coming up. I just wondered, is this actually feasible when August is, you know, the sort of height of school holidays and all that sort of stuff? Is it achievable?
Yeah, so this is actually the Hayward plan that they've agreed with us, and actually we chose our slot for phase 2. So the systems projects and systems manager is leading on that, and they have confirmed the availability. So the testing is currently going on within their team at the moment. So yes, it was all very pre-scheduled, and it was made in line with what availability we've got in the service as well.
Okay, thank you, Michelle.
Barry?
I appreciate an updated training plan was sent this week, but that's probably because I raised it in the pre-meeting. But it's just basically to make sure that we almost have a rolling year plan, because some things like the LGA conference in January was like set this January, just to make sure that that's always sort of looking far enough ahead so that the year doesn't sort of end in December when, say, we were having our November meeting.
Yeah, point noted, Barry. And I think what we've done this time as well is anywhere we know their annual conferences, even if the dates haven't been released yet, we've tried to put on there when we think they're likely to be, just to give a bit of a heads up as well. So thank you.
Val, you have another point?
Yeah, I do. I just wanted to say thank you to Barry for actually suggesting that the training plan really goes on a rolling year, because I book my holidays a year in advance, so I've now got things that I can work around. Thank you, Barry.
And Michelle, just to confirm the obvious, 334 actually says pension committee. So if any members of the pension board would like to attend any of these events, then to contact, who should we be contacting?
Yeah, no, that is correct. It's equally applicable to the committee and the board, and either myself or Madalena.
Fine, thank you very much. I hope that detail that Michelle gave was useful to our new members. Are there any more questions? Then the board has been asked to note the governance and compliance report, and I'll take it that we have done that. Item 7 is the KPMG audit plan for the fund 24-25. Can I ask Ben Barlow, Investment and Fund Accounting Manager, to present that report?
Yeah, thank you, Chair. Yeah, as you said, this is a KPMG report, so I'm speaking to you as a KPMG auditor. It has been presented at the audit committee already and the pension committee. Obviously, we're officers that implement the KPMG plan, but I will run through the plan in any case, of course. So there's no real surprises on there. It's similar to the report we see every year, really. I'll pick out their main risks. So a standing risk is override of management controls, which you'd normally see in any audit, really. This is usually tested by the auditor through journal sampling. So what they want to see here is that we're not doing anything to override any of the controls, so such as the correct people are raising things, the correct people are approving things, and those sorts of actions. So they can test that through journaling, and that will be done as expected in previous years. So there's no concern from officers there that we can't mitigate that risk and get a tick in that box. Their second key risk is the valuation of level 2 and 3 assets. So again, this is something that we see every year. So just explain that a little bit. So level 1 assets would be things like equities that are valued daily. As for things like property and private equity, the valuing is not obviously so clear. Because of that, there's a delay in the time we get them to the accounts. So there's a level of estimation in there. By the time we get to the audit, we've usually got those actual accounts, those actual figures. So there will be a bit of work on to see the difference between the estimates and how we've done the estimates, which we would do in line with SIT for governance, and the actual amounts. Now, we don't see this as a concern again as officers, because we always adjust for this anyway. So as soon as we've got the actual figures, we will do a journal to put in the correct figures. But they obviously need to gather some assurance around how that estimation was done between the draft and the final accounts, and they will make a recommendation that an adjustment should be done, which we will then do. The main example of this, or one that's come up in previous years, is Cambridge and Counties Bank. Now, the valuation for that one, we do get an external valuation by Grant Thornton. So what the auditor will be doing is also just understanding their valuation process and how they've done that. And actually, that's something we've already commenced with the audit, and that's virtually signed off, really, that KPMG, the external auditor, is happy with what Grant Thornton, the valuer of Cambridge and Counties Bank, is doing in their processes. So again, that's a risk we would expect to see, but not one we're concerned by as officers. The other probably key bit to pick out is the materiality. So they've set materiality at 48 million overall. And then anything that's on or above 2.4 million would be classed as a material misstatement. But going back to my previous comment, this isn't really a concern for officers, because we would always adjust for any differences, be material or not. And that's certainly what we've done in previous years, which is why we've never had any material or non-material differences that haven't been adjusted for. Obviously, it's a duty of the auditor to highlight what is classed as materiality. There's on page 56 of the pack is the detail around fees. So the statutory fee is 98k this year. That is something that is set by the PSAA, which is the Public Sector Audit Appointments, and that's basically a tendering process that is agreed by the local authority. Obviously, the pension fund accounts are part of the group accounts for the council, so they will go in the back of the group accounts. And because of that, just the final point is that although we'll be aiming to wrap up the audit by sort of October, November time, the signing of the local authority means the official sign off may have to wait, and that's usually the case every year, really. I'll just sum it up really by saying the audit has started. It's going well. From an officer point of view, it's largely the same team, processes and controls in previous years. We know the KPMG team, there's no changes there. So Asim Iqbal is the lead auditor for pensions. we've worked with him for now a couple of years, and actually knew him from the other authority we work on as well. So we've got a good relationship there with the auditors. So we're expecting a good close down and a clean audit process. The draft statement of accounts has already been to the pension committee this week and was received well. So other than that, I'm happy to open up to questions or comments, but just bear in mind this is a KPMG paper that I'm presenting rather than an officer paper.
Val, you have a question.
I just have one question. It's on Ben. It's on item 1.1. I just wonder if there's a typo again. Should it be SOA rather than SPA SPA on the last line?
So which page of the pack is that? Do you mind, Val, if you've got it?
It's page 34.
Oh, thank you.
I think it's your paper.
Ah, lovely. If
You're
it's
covering,
my paper,
you're covering paper.
Page 34, section what, sorry?
1.1. The last line. You've got the initials SPA. I think it should be SOA.
Yeah, I think you're right. We'll make sure that's corrected. Thank you.
All right, thank you.
Councillor Martin.
Thank you, Chair. Just a quick question. From experience, one of the big issues for external auditors is changing resources, both from the side of, in this case, the fund, but also from the side of KPMG. Ben, do you have any idea on, is there likely to be any changing in resources, both predominantly from a staffing point of view over the next 4 to 6 months when this audit's going to be carried out from either side, that's going to hinder that timeline that you set out?
No, it's pretty much the same team from us and from them, which I'm quite grateful for, because as I said, we've worked with them before. We know what their processes are. In fact, we know pretty much what all their test of controls will be. So we've prepared all the working papers in line. So no changes to resources, and I expect us to finish on time. If anything, we're slightly ahead at the moment.
Perfect. Thank you very much.
Tom.
Thank you, Chair. I just had a quick question regarding Grant Thornton. Are they the primary auditors for Cambridgeshire and Counties Bank? Is that why they're doing valuation, or is that?
No, yes, they're completely external to KPM. To our auditors, KPMG, and to CCB. They're being brought in just to do this valuation on behalf of the fund. So we wanted to make sure that there's no linkage at all. That's why they're the chosen provider for this valuation. Yeah.
And their fee, is that included within the fee quoted for KPMG, or is that disclosed separately?
No, their fee is separate, and that will be disclosed within the statement of accounts. I haven't got it to hand.
That's fine.
It is a separate fee. Yeah, it's an external valuation, so it's not linked to the audit.
Yeah,
the fees around in the audit. Yeah.
Okay, lovely. Thank you.
And Ben, a question from myself: is it actually, whilst it may be constructive to progressing the audit, is it actually best policy to have the same audit team? You say you know what they're going to ask, and you've already been able to prepare the material. That seems to pose a possible risk.
Yeah, I'm talking about the statutory working papers there. So we always know there's going to be, for instance, a check on journals. So we will prepare all the journals that have been run over the year and make sure that ties back to figures. So they've got something to test. So we're providing them with the means to do their test of controls. Yes, there'll be additional questions each year, which might be different, which obviously we will pick up as needed. But it's more the preparation of information rather than a sort of answering questions before they come, if that helps. The audit team is slightly different. There is slightly different members, but it's still Asim at the top. And obviously we change the actual auditor every I think it's every 3 years it can possibly change. So although from last year to this year we've got the same sort of team, it's not to say that we won't have a different audit firm from KPMG in the future. And we certainly worked with BDO, Grant Thornton, PwC, all the big ones in the past. And they all ask the similar questions. So that preparation of those standard working papers is what I'm referring to, which would be the same across most auditors.
Thank you very much. Mark?
Yeah, and it's worth pointing out, I think, two things. One, there is a difference between the two pension funds we look after in terms of what they have. Like, for example, the bank is in Cambridgeshire. There's nothing like that in Northamptonshire. So what they're analysing will be different. And secondly, they also have rules regarding rotation of different roles at different levels within their organisation for any particular audit anyway. So they will take care of that aspect, as well as the fact that obviously the authority gets a completely different auditor every so often as well.
Thank you. Are there any more questions? Tom?
Sorry, one follow-up question that's just come to my mind. Just going back to the materiality. I mean, usually that's something that's proposed by the auditor, given the risks and what they know about the organisation. Are you comfortable as a pension fund that their materiality levels are appropriate?
Yeah, it's a standard process, really. So they usually do 1% of the total draft assets as at the end of the year. So it's the figure we were expecting, and we see not only KPMG do, but all the other sort of big four that we've worked with in the past. That's the way they do it. But again, I mean, although obviously we value that, we keep a good eye on what the materiality is. We always adjust for anything that's material or non-material anyway. So generally, we have a very clean audit findings report come the end of the year. But yeah, there's again no surprises and something we would expect and agree with.
Okay, great. That's fine. Thank you. That was all.
Fine. Okay. Thank you all. The board has been asked to note the audit plan that we have done, and thank you for your presentation, Ben. The item 8 on the agenda is the administering authority discretions. Can I ask Michelle, Governance and Regulation Manager, to present this report, please?
Yes, thank you. So this policy is being presented as a post approved one. It was approved by the committee in June, and it is a fairly standard policy that we've had in place for some years now. So this has obviously got to the 3-year point that needed the committee review. And really the purpose of this policy is to provide clear and consistent framework for how we exercise our discretions under the LGPS regulations. So we're obviously required to formulate, publish and keep under review how we will exercise our discretionary powers. And what it really does is make sure for our members, our employers, that it's a clear and transparent policy, that we can demonstrate that we're treating scenarios fairly, and we're clear in the process of how we make our decisions around those. So one factor really around these is that some decisions can have cost implications, either for the fund but more likely for the scheme employers. Therefore the policy does enable us to manage our risks by setting kind of boundaries on how certain discretions will be applied. So some examples of these would be the discretions around exit credits, the payment of employer strain costs, and the transfer time limit and the extension around those as well, which all can have an impact for the fund and for the employer. So the review highlights changes in section 5.2 of the report. Most of the updates this time, as I say, the policies been in circulation for some time, so most of them were just minor updates. What we have done this time is just made one moderate change, which is to allow extensions to the notice period for voluntary and flexible retirement limits. So what we've put in there around exceptional circumstances, so the discretion in itself is actually already quite favourable to the member, as the actual regulations permit 3 months, and we have a 1 month window there. But what we did think was, if there were any members that could be disadvantaged even at that 1 month, and it could be a situation where, say, an estimate has been sat with us, for example, and it's been accidentally missed and it's kind of impacted that decision making, then we now do have the flexibility to say, actually, this was an exceptional circumstance that we didn't have before. Obviously, the content is quite technical in terms of all the discretions against the regulations, and also just to add that the employers also have the option to have their own discretion policies as well. Some of those do link directly to the administering authority ones. So flexible for retirement, for example, is one that can cover both ourselves and employers, but in different ways. I didn't really have anything further to say on this policy, but I am happy to take any questions if there are any.
Thank you, Michelle, and thank you for the reminder that employers also have their own policies. I think Parish Council's done that. Councillor Martin.
Thank you, Chair, and thank you, Michelle, for the report. So I have a couple of questions, Chair, if that's okay.
Absolutely.
So just wondering, so as part of this review, did we get any external legal advice? Obviously, just thinking about seeing whether any of our discretionary policies, obviously, do they consist with the general code of practice, but also do they conflict with any case law, any ombudsman's rulings, or any SAB guidance?
So for this particular review, it was done internally by one of our regulation specialists. This policy does tend to get updated more so if there's been a change in regulations that obviously then impact a policy or a discretion within this policy. Obviously, we're always updating our other policies as well that feed into this. So our administration policy strategy, for example, would feed directly into this. So we kind of, for this officer, for this review, we've looked around those types of things, and actually if there's any kind of issues where we could tidy it up a bit. I don't know, and I don't know if Mark, whether you know this, because this one has been around for some time, whether we've ever had a legal review on this one. I mean, they go to, for the committee version, they have a legal review in terms of the reports go through a legal process. But I'm not sure whether we've had a full legal review on the detail within it. If we don't know today, I can certainly find out for you.
If I may come in, it's not necessary for this one, because this is not a policy where we've had to construct it. This is a policy which effectively is where centrally, I think it was the Scheme Advisory Board, our LGA, they identified every single area of regulation where a discretion was allowed, and all we have done in this policy is simply said what our discretion is, how we're using that discretion. So effectively, it's almost like a decision as to who makes a decision and that kind of thing. So it's not. We didn't feel it was necessary to go through a review, which we do sometimes. It just depends on how we've actually constructed a policy. Other policies, for example, will use our professional advisors, such as our actuarial consultant or investment consultant, to help develop it, as well as potentially using legal as well. So it's just the nature of this one. In effect, look at it as almost like a sort of, if you like, a table and we've just said how we utilise each area of discretion.
Perfect. No, thank you, Mark. Thank you, Michelle. That's very useful context. And just going on to more of from an operational consistency point of view, how are discretionary decisions tracked and documented so that we can ensure that there is consistency across all cases? And are decision makers required to put down a detailed documented justification for each case, which is then tracked at a higher level over a given period of time to ensure that there is the consistency across the discretions given?
Yeah, so this one I think depends on which discretion it is. So some of them so all of them have operational processes, but some of them have more of a formal process as well. And maybe Corey or Mark might want to come in. So exit credits, for example, is one that's kind of tracked more formally through the board and committee. Internally, these discretions effectively are Mark unless some of them are obviously specified as other individuals, and it would be their responsibility to obviously check what's coming their way in terms of the discretion. I don't know, obviously Mark, you deal with these more on a day-to-day basis than I do, so you might have some further input.
Yeah, I mean, if they are effectively quite complex decisions that could be subject to appeal, for example, who we pay a death grant to. So every single death grant is at our discretion as to who it's paid, and so we have a decision sheet which records all the evidence required, such as the will, such as the expression of wish, such as whether any other factors have been disclosed, and then either myself if it's over a certain value or the operations manager if it's below that will effectively use that decision sheet to record the rationale for their decision based on that evidence. In a similar way, the exit credits have a very detailed process as well. And something at the other end, which might just be an exchange of emails, might be something like an employer who wants to extend the period over which they pay off any strain costs following an early retirement, like a redundancy or efficiency. And that might just be like an exchange understanding, and an understanding of the financial impact, for example. So it does vary, but there'll always be a audit trail in terms of something in writing regarding any of these. But sometimes they are really quite complex, and we've got a formal, as I say, process or decision sheet. The point on consistency, sorry, you can never fet a discretion, so you have to look at each case anyway in all of these, and so you might come to seemingly a different decision, although there will no doubt be nuances as to why you've reached it. So each one is looked at in isolation. But the exit credit one is an example. We have a process of how we would normally arrive at it, but we would still look at every single aspect individually, even with that in place.
That's very useful, and absolutely need to look at each individual case without looking at how we've looked elsewhere. That's where I think the decision making or writing down how we got to the decision and having that detail that can be looked at by a manager if needs be, or if we come to an appeal, is a useful process. That's why I just wanted to check what our process was. So the decision sheet is very useful to know and understand. And then my final question, Chair, is around any policy gaps or grey areas. Obviously, with all the goodwill in the world, the fund has been operating for a number of years. You've probably thought through every single potential case that's going to come across your desk. How would you deal with something that sits outside of our discretionary policy? If there's a grey area, so using an example that I'm looking through the policy, if you had two beneficiaries that are equally entitled to death grants, or you have early retirement that could be granted on compassionate grounds without the employer's consent. I didn't see any notes of them in the policy. How would you go about bringing that case forward? Does that get escalated to the top and then come to us, or is there a function within your teams that would be able to deal with that internally first?
Yeah, so I think I'll
No.
start and then you come in, Mark. But I think with some of the cases we get and the ones that you've kind of highlighted, especially around kind of beneficiaries and disputes and that type of thing, we will always do an internal review first and obviously take into account all the relevant information and what we should be including for that decision and what needs to be regarded. What I would say, there have been a few cases like that over the years where it's been a little bit kind of maybe contentious within families and things like that, and making the right decision. So those cases we do tend to seek legal advice if we need to, just to make sure that we're not making any decisions that kind of go against a legal basis. So as I say, we have got that as a backup as well if we are unsure, after we've done obviously all our internal processes and our due diligence, and you still think there's maybe a little bit of an uncertainty there, we will get legal advice on those ones. But Mark, you might want to come in as well.
No, that's all I would have said as well.
Okay. Thank you very much. Thanks, Chair.
Barry.
So I'm just wondering, I am sort of aware that it has happened in the past where people have nominated on their expression of wish form and nominated their pets. How do you deal with those sorts of issues where yeah, I'm guessing it might be sort of not legally possible to pay their dog, let's say.
I haven't actually come across one of those cases. I'm not sure whether we have done in the fund. We have had ones where it's been more of a charity linked to, maybe cats protection or something like that. But I'm not aware that we've been in that situation. I don't know if any other officers are. And I guess if we were in that situation, we might have to take some advice, because it's not something that we've seen. I don't know if Mark or anybody else has, but
No, not at all. No, and I mean, I think the reality is the kind of things, the difficult ones tend to be where you haven't got anything to go on. There's no will, there's no expression of wish. That can be really difficult. Obviously, it's where the expression of wish reflects a relationship that is, no longer quite what it was when it was put in place, and it's where the expression of wish is really aged. It's those kind of things. But no, I don't think anything as unusual. I think it's usually the family relationships that provide the difficulty in making those decisions more than anything else.
Tom.
Because the policy is quite broad, this might not be an easy one to answer, but how do you find, sorry, let me rephrase this. In terms of when you make a determination under this policy, do you find that you're receiving any levels of appeals as to the decision from people who are collecting benefits or employers, etc.? Broadly speaking, I'm trying to ask, do you get the feeling that members are happy with the decisions being made under that policy? There'll always be a level of variation, but...
Well, I mean, me and Michelle Michelle might come in, but I would look to the number of formal disputes we have in total, which is very, very few. I mean, you have this. You've got a couple of, well, I think there's 3 stage 1, some of which have been going on for more than one period. I don't think we ever see any more than that in a quarter, and they certainly don't. Hardly any of them relate to decisions made as per discretion. We certainly have had decisions challenged, including formally around things like we've just been describing. I think we've had exit credit. We've had one formal, I believe it is, Corey, isn't it? I think in total across the 2 funds we look after, but we've had informal discussions around that. And what we've done over time is we've moved some of the decisions away from myself, because I'm the stage 1 adjudicator for appeals, or under the IDRP process, I've moved a decision deliberately to, in some cases, Corey, in some cases, the operations manager. So it frees me up to hear any appeal. And I think the most contentious area probably is the exit credit area, because if the employer doesn't get the whole of the exit credit, then there is a clear possibility that they might appeal.
Okay, so yeah, so it sounds like the policy is working as intended then.
Yep.
I think we would support that separation of duties so that you've got yourself freed up to take those tier 1, I think you called it, complaints. So yeah, that's good.
Thank you. If there are no further questions, we have been asked to review the Administration Authority discretion policy, and we have done that. Thank you. Michelle, another one for you. Item 9 is the Equality, Equity, Diversity and Inclusion EEDI policy. Can I ask you to introduce the report?
Yes, thank you. So last year, an action plan was agreed, and effectively having a policy put in place was one of those actions that we've been working on. The policy was approved by the committee in June and was based on the pension regulator guidance that was issued in March 23. And this guidance effectively outlined the principles for how scheme managers should approach EDI issues and gave some practical ideas of how to implement them. Then when the General Code of Practice was released in January 24, this further backed up the need to consider EDI and the ways that we could implement it further as well. So the intention of the policy is to set out the commitment and approach of the Cambridgeshire Pension Fund to EDI, making sure that those involved in managing the fund are comprised of individuals with a broad range of characteristics, life experiences, expertise and skills. The policy also, we made sure it aligned with the Cambridgeshire County Council policy as well. I did include equity into the title of our policy. We've had lots of discussions over the last 12 months and probably further back with yourselves and with the pension committee that felt very strongly that equity was just as an important factor. So I did factor that in, and the committee were happy for it to be an EEDI policy. Later in the year, we will update further about all of the actions in the plan and where we've got to date. But for the purpose of this meeting, we have started to progress some of the areas. So the policy is obviously one of them. We also use the pension regulator template for the recruitment of the last local pension board members, and from what we understand, whether it was the template itself or other reasons, but that's been received quite successfully, and we've had the highest number of applicants at each 3 of those, which has been really good. We have a log for capturing members if they have difficulties with any of our forms, if they have difficulties navigating the website, accessing their member self-service account. We can obviously start to look for patterns if, quite a number of our members are saying, I don't understand what this form is saying. We can obviously, it gives us some good data to be able to actually do something about that. An email has gone out to all members and employers regarding feedback of the new website. So obviously we will analyse any feedback we get from that, and it ensures that we can be quite proactive in making any necessary changes if there's any issues there. And also as part of our complaints that Mark was just touching on, we obviously have informal complaints, and then stage 1 of the IDRP process, which is within our remit. Stage 2 then goes to the monitoring officer. But for those complaints, we've started to look at actually whether there were any barriers or any communication issues or things where maybe we could have acted differently in those cases, whether a phone call might have been more beneficial in a particular case, or was the communication that we sent out clear enough, could it have avoided a complaint, and that type of thing. So we will continue to monitor the EDI actions, and we will update the business plan also on EDI. But I'm happy to take any questions on either the policy itself or any of the EDI planned actions.
Barry, over to you.
So page 102 about the fund appointments is sort of just a general comment that both the committee and the board are not the most diverse, but that's kind of limited by the fact that some appointments are of councillors, so that's down to, you know, an election process anyway, and just really I think it's more about awareness and training really, to be representative of diverse communities.
Yeah, no, absolutely agree, Barry. Obviously, we do have some barriers in some areas, and I think this policy is effectively just doing the best we can with the remit that we have. Training, as you know, we put on an EDI training session quite early on, and we've recently circulated that round to all members, including all the new members as well. And it is something that as part of this action plan, it's to think about the ongoing training and what would be the best way to deliver that, and at what point. There's obviously training we need to consider for you as board members and for the committee members. There's also training for ourselves as officers. So we do have internally EDI training that we need to complete. I believe councillors probably have the same under CCC as well. And then it's whether you want to go kind of any step further with that. So myself and Madalena, for example, we attended an EDI workshop that we found really beneficial. So it's kind of putting the general training out there is the first point, but we will start to think about what that looks like going forward, and how we monitor that as well to make sure that everybody's you know, as content as they can be in this area.
Thank you. If there are no more questions, I mean, just to highlight 1.9 to people, where EEDI and EDI are interchangeable. It is potentially confusing to have an EEDI policy, which we then talk about as EDI, but they are clearly interchangeable. So thank you. The board has been asked to review the Cambridgeshire Pension Fund Equality, Equity, Diversity and Inclusion Policy, and we have done that. Thank you all. Moving on to item 10 is the Administration Performance Report. And I understand, Mark, you as Head of Pensions will be introducing this report.
Yes, thank you, Chair. So this is, I think, a report that this is the first time I think you've seen it in this format, if I believe. Effectively, it used to be four different reports, albeit with the local pension board, we did always include admissions and cessations in an admin report. It's trying to give it, aside really from anything where we bring a specific report around let's say a project, like sometimes pension dashboards, for example. This is trying to bring everything administration related together The only thing we've kept out is that governance and compliance, which we kind of use as a bit of training as well as giving information. In terms of I will probably step through it in a bit more detail this time, and perhaps won't do it in future iterations. Section 3.1, page 108, gives a bit of context around the scale of business as usual, as it were. So in terms of dealing with our scheme members, we do an awful lot of calculations each period, so it's over 7,500. We issue a survey to anytime we have a complete task effectively on the system. Normally, we don't get great return rates as you would expect for surveys. However, our rating is normally probably at the higher end of what you're seeing there. So normally it's sort of just under 4 up to 4, and sometimes just over. So 3.33 was a particularly low, I think, reporting month. In terms of the KPIs which are in the first appendix, they are more complex than they will be in future, and that's because what you are seeing is the final month of the old categories of KPIs. We've moved over to a new suite of far more comprehensive KPIs that mirror what needs to go in the scheme annual report. So SIPFA advise on or gave guidance on what should go in the annual report. And what we've done is to keep things simple, is we've mirrored what those required KPIs are for our quarterly reporting going forward. So it's almost doubled the number of KPIs we report. What you will see on those KPIs is in a couple of areas. You do see how we've improved from month 1 to month 2. So what they particularly started reporting was some of our quote stages of our retirement processes. So we always reported our deferred, so retirements from deferred status and retirements from active status. But what you are now seeing is the number of quotations we issue in advance of a deferred retirement, and also anybody who's having an active retirement who wants a quotation to decide what lump sum pension split they want, or any other information they want. What you'll notice from those is that we have an awful lot of quotations that go out for deferred because people haven't they've had an annual update through a deferred ABS, but this is a formal, you can receive your benefits now, please decide how much you want to have as a pension or lump sum. You then see lower numbers of actual people taking it because they can take it at any point after they actually get that option to take it. The retirement ones from active are completely different. We do far more actual retirements than we do quotations. In fact, the quotations are very, very low number. And as you'll see from the KPIs, it doesn't take very many to actually make the KPI not look that good. We are where other areas we started reporting for the first time, such as around the divorce processes. That's an area we need to, I think I would say, improve as well. So we're looking at what we can do around that. And I think Michelle, and please do come if I don't get this right. I think what we have identified is there's sometimes other processes going on with those records that need to complete, and that's what's been causing those to be what they are. So we're looking at how we can make sure we're looking at things more holistically earlier, so that we reduce the chance of those not looking that good as KPIs, and of course with the knock-on impact on member experience. In terms of member experience, the other set of KPIs, just to explain, are looking at the end-to-end process. So the customer journey KPIs is probably what we term them. And so this isn't just our performance, that's the performance of the scheme employer sending us information, the member having to return documents if they're involved in a process, and really just looking at the trigger point of the process and the end of the process, with not really caring whose responsibility different parts of that process are. But what we do to give you some idea of how we fit in with that is we say, what percentage of failures were as a result of scheme employer take it as read. A lot of, if it's not the scheme employer, a lot of the failures, if it's not the scheme employer, would be us. So I hope those are useful. As I say, it should simplify next reporting period when we just have the 2 sets of KPIs. So just moving on, we also report receipt of employee and employer contributions. So this is really, our role in this is simply monitoring and dealing with any employers that fail to adhere to the required timescales. So effectively policing of the scheme employers in that respect. Generally speaking, you don't see many issues there. We do identify in the exempt appendix any late contributions and what we've done, if there's been previous failures, etc. Generally speaking, we don't have too many problems with employers and can usually sort them out fine. Breaches of law, there are usually immaterial breaches, particularly where some of the customer journey KPIs, which refer to statutory timescales in many cases, if there's failures there. There is one thing which we now understand through the access and fairness consultation, and we've been reporting refunds being paid over 5 years, every single quarter for many years, because there's a gap in the regulations. That gap's going to be closed by an amendment, we believe, in due course now. So that will probably stop being reported at that point. But nothing to worry about in there. If there's anything material, we would flag it, and indeed we probably would already have reported by the time we come to committee. So very often we're reporting that after the event. Example, if we had an issue with annual benefit statements going out and we felt it was material, we would self-report that immediately and then inform you of that. Dispute resolution cases, I mentioned there's an appendix with some details around some cases. There are a couple of cases where the due date was 28th of June. Both of those have been partially upheld, so they have been completed. I don't have any sort of further updates on that. Data breaches, significant overpayments, we would report through this report. We do have significant overpayments. We're a pension fund with, best part of 100,000 members. Things will be discovered that have gone wrong, whether recently or in the dim and distant past. So we do report those from time to time, and that will be in that section 3.19. The next big part of the report is around the business plan activities. So in March each year, we formulate a business plan with a budget, and then we provide updates quarterly through this report. There is, so beyond what's in the appendix, what I would flag is a couple of updates that went through the Pensions Committee. So we did substitute 2 activities. As Michelle's already mentioned, one of them was the Rectify in survivor benefit. It's now been expanded to include everything in the access and fairness consultation, including that. We substituted the build and for access to build an FCA regulated entity, which Ben is going to talk about in detail in the exempt section. But because government didn't give support for access building an FCA regulated entity, what we've changed that into is for us to join another pool, so to merge and join with another pool. So that now reflects the work we've been doing and indeed what Ben will talk about later. The other one mentioned here actually finalised the transfer of legacy assets into the access. That will just be very simply, we'll just change access to whoever we go with ultimately. The only other update I was going to make on the business plan activities was the unprocessed leavers, which is mentioned as an amber. But what we did agree with the committee is we got approval to just outsource 1,000 cases using one of our existing suppliers over a 8 to 12 month period. So it will just accelerate the processing of that clearing down that backlog, which will be really positive and will particularly put us in a better position when dashboards go live. The more records are at the right status, the better it will be from a pension dashboard perspective. So that's the business plan activities. And I should say that that additional cost of that is not really material to the overall cost of the scheme at all. In fact, it may well be absorbed within our vacancy factor and our existing consultancy budget. Risk monitoring, we do have a really comprehensive risk management or risk monitoring process. So what we've done this time is, in tandem with bringing this into this report, we have completely revised the format of the risk register. I appreciate if you're looking at a paper copy, it's not going to be easy to read. You do need to look at this electronically because this is a very big document. When we went through it, just to put it into the new format and add some extra, if you like, some extra reporting points on it, we did just look to see whether there are any gaps in what we had there. And so you can see there's a few additional risks that have been added in the table in section 3.26 on page 110. As an example, failure to operate strict financial controls, failure to recover all significant overpayments and debts. Just things that we hadn't articulated clearly and we thought it'd be worth breaking them out. So they've been added. We've updated obviously some mitigations. The one thing I would flag is that one of the risks that have been added now needs to change and will change next time. So that's risk 8C on that table. Government may wish the fund access pool to merge with another pool which appears contrary to the fund's best interests and may lead to legal recourse, which was exactly where we were at a couple of months ago, or perhaps now a bit longer than that. But government hasn't supported the access build. When we've analysed the situation, it's fair to say that the options out there were different from when we did some original work which identified an access build as being preferable. And so therefore, we don't have it's not in the best interest concerns in the same way as we did. And we're not going to take any legal action on it. So that will change that risk. But I will say no more on that and leave everything to Ben to go through later. It's worth saying, alongside the main risk register, we do a risk assurance document. And what this is it's looking at any red or amber risks and identifying a KPI or an indicator which gives you some confidence that we are managing that risk. And it's I think the period it's looking at is explained within that document for each of those particular items. For example, we look at rolling year periods in some cases. And I think Val, I did see a number of queries that you raised, and what I would say is that sometimes that looking at that KPI may give a different RAG status, if you like, compared to the actual risk within the register. But this is actually it's just looking at what that KPI is effectively saying. It is fairly new, and I am completely open to us, accepting that maybe there's a different KPI we need to look at to give you confidence around those risks. It's been in for a couple of periods now, so we can build on that. And I think finally, this report goes through admissions and cessations to the fund, which are reported in section 3.29 onwards. The committee itself, who also get this reporting, does sometimes have the ability to turn down an admission. So most admissions, it's just reporting and to note. But it's still an important point because we need that for the sealing process of admission agreements, for example. But if it's a particular type of admission, then there is sometimes a role for the committee to decide whether, taking account of its own policy it's put in place, whether it wants to accept that admission. And that tends to be things where there's or bodies where there's a community of interest. As opposed to, let's say, for example, a contracting situation. I'll pause there, and no doubt there'll be some questions on that because there's a lot in that report. Thank you, Chair.
Barry, over to you.
Just really wanted to highlight bottom of page 108 and top of 109, 3.12, just to say there's some really good figures there. 2 months at 100% and one at 99.8. So just to highlight that. And the only other point, so I just need to scroll down to it, page 112, 3.30, I think there's a typo there. There should be an open brackets before the name of the school.
Sorry, which school is that, sorry? Oh, I could see one. Yeah, I can see one without an open bracket. Yeah, in 3.30. Yeah, third one down.
Val, over to you.
Thank you very much, Dennis. Just a couple of points, and I don't know whether the board just needs to have a little bit more information about your thoughts on what is in the exempt risk register and what is actually in the public one. I don't know whether they actually understand your reasoning for putting some things in the, a majority of it in the public, and then there's things that you've pulled out. And I don't know whether that was clear in, so it wasn't clear to me in the papers, and I don't know whether it's clear in what you've just told us. I only know because of what I spoke to Michelle about yesterday.
Val, just before you get an answer to that, can I just remind members that appendices 2, 6 and 7 are confidential?
Okay, it's not anything about the actual...
No, I understood, but just I had forgotten to mention that when people started asking questions.
Okay. Okay, Appendix 5 says risk register public. Appendix 7 says risk register exempt. It's like, why has there been the split between the two? Because we used to have all the risks together, and obviously some things couldn't be going out to the public. And I just wonder, for clarity, how have you decided to put the exempt things in the exempt one and just keep the other things in the public one? I just wonder what the process was.
Well, I mean, I think the thing before the risk register was the issue was the risk register was at one point entirely exempt because of some particularly sensitive risks. So risks around things like where someone can glean detail of what we're doing around cyber risk, around dealing with scams, fraudsters, etc., particularly where it was showing we had anything to do on that, we would not put in the public domain. And so what we've tried to do here is pull out the risks where there's that kind of sensitivity and put them in there. And I think the only, 3 of them are clearly related to that, and one perhaps not. But that's the thinking, and I think that's probably a very from our perspective, that we thought that was a very sensible way of going about things. So what we're trying to do here is effectively the complete reverse of what we did before. We're trying to maximise the amount we put in the public domain.
Yeah, if I can just come in on that point as well, Mark, the one that you said, the clearly in there is one that is in there by error. So the 12A does need to go into the public one next time. But as Mark said, we've been doing a piece of work for quite some time now to try and be as transparent as we can and get as much information into the public domain as possible. And I think actually part of that direction has come from the board and the committee in previous meetings. So it's a good compromise, as best compromise as we can get, to obviously getting as much that we can out there. But as Mark rightly said, anywhere there's kind of any sensitivities or any ongoing actions that we felt couldn't be in the public domain are going to remain in that exempt section.
I think that totally makes sense. It's just that wanted it to make sure that the committee understood and the board understood your thought behind it, and I didn't think that had been explained, if you get what I mean. That was the only reason for me raising it again. I do have one small point on, let me just get this up. It's on the find it. It's in 5D under admin and comms on the spreadsheet. And it's if I give you a time to get that up.
Do you have
Yeah.
the reference in the papers, Val, not the spreadsheet?
It's on the spreadsheets that were sent as an addition, because they didn't print out very well, and you couldn't see them actually on the papers. So it's on the spreadsheet that we were sent.
So is this failure to process all casework in line with service standards and statutory deadlines?
Yes.
Yeah.
What I was just sort of commenting on was the internal controls. So it says here, pension committee and board oversight of performance. I just wonder, really, is that really an internal control? Is the internal control more of about what you guys can do? I mean, what all we can do is just sort of point out to you guys if we think there's something, but we don't know that amount of detail to say the failure of the process of the casework in line with service standards and statutory deadlines. We're not that close to the actual risk.
I think I would probably agree actually that it's what your role is oversight as opposed to dealing with the actual internal management of it. We'll have a look at that one, I think.
There might be some others, but that's the one that just really just jumped out at me.
Yeah, no, we'll have a look at that.
Okay, and I don't think I haven't got really anything else I wanted to add on this. I see where you're going on, sort of trying to make our pack much smaller, also so for us to read and for you guys to prepare, which I totally agree with. And just say thank you very much, and we look forward to working with you in the future on this new document.
Thank you, Val.
Thank you, Val. Any more questions? Okay, if there are no more questions, then we have been asked to note the contents of the report, to review the risk register in appendices 5 and 7, which are exempt. And as Val says, we were also circulated with an Excel version of that, which may be easier to study. To note the admission of the following transfer admission bodies to the fund. That's ABM Catering from Fulbourn Primary, Compass Group UK and Ireland, which is 4C's Multi-Academy Trust, Innovate Services Limited from the Astria Multi-Academy Trust, KGB Cleaning Southwest, the Active Learning Trust. Always wonder about that name, KGB, but there we go. Service Master Limited from Helthwaite School. And note one employer joining the fund as a resolution body, and that's Littleport Town Council. And the cessation of the following admission agreements. That's Caterlink Limited from Active Learning Trust, Edwards and Blake Limited from Bassingbourn Primary, Hertfordshire Catering Limited from Hawkson Primary, and Service Master Limited from the Active Learning Trust. And finally, to note the updates to previously cessation routes relating to Aspen Services Limited, from St John's the Baptist Catholic Academy Trust, and Burwell Parish Council. And that we have duly done. We are moving on then to the agenda plan. Does anyone have any questions regarding that? Val, thank you very much. Over to you.
Just one small point. The same happened last year. In my diary, I've got the January meeting on the 30th of January, but actually, looking at the new sort of training plan, it actually clashes now with the LGA conference on the 29th and 30th in Cardiff.
We'll have a look at that, Val. Unfortunately, we agree the dates for these meetings so far in advance, and then obviously then some clashes do come out. I'll have a word with Democratic Services, see if there's any way. Is that the governance conference? Because quite a few of us do like to attend that, even if it's just virtually. So
yes, it's the governance conference.
Yeah, so that's quite a key one as well. I'll see what we can do about that.
Yeah, I don't know whether any other clash it is, just that's the one that sort of popped out when I was looking through them.
Oh, thank you. We do try and look at all clashes across all committees, boards, training, but sometimes they come out after and it's just unfortunate, but we'll see what we can do.
Okay, thank you very much.
Well spotted on that one, Val. Thank you. If there are no other questions, we'll take the agenda plan as noted. We will now move to items for which it's necessary to exclude the press and public. Do members agree to resolve that the press and public be excluded from the meeting on the grounds that the agenda contains exempt information under paragraph 3 of Part 1 of Schedule 12A of the Local Government Act 1972 as amended, and that it would not be in the public interest for this information to be disclosed, information regarding to the financial business affairs of any particular person, including the authority holding that information. Do members so agree? Show of hands, please, in favour. Thank you. As this is the final public item on the agenda, I would like to express my thanks to those members of the public and press who have taken the time to watch